Holy smokes everyone, we just got some new breaking news inflation data for the Producers Price Index, and again, just like the CPI data yesterday, it came in much hotter than expected. There's now no debate about inflation versus deflation, even though we should be heading into a deflationary economy. The Fed, the central banks around the world, and the governments are pumping so much stimulus in, and they've created so much supply shortages that there's no other way for prices to go but straight up. So now, this is not a drill anymore. It is time to prepare right now because prices are going to continue to rise. You may want to start buying things now before they get even more expensive. Okay, let's get right into it. Now, first things first, I want to show you a video about when the Federal Reserve Jerome Powell was grilled about inflation, about the coming inflation, about all the money printing, about the quantitative easing, and they're asking if the dollar is a good store of value anymore, or if all this money printing is going to lead to inflation. And of course he was like, no, it won't happen. But look what's happening now. Let's watch this video first.
What would you say constitutes sound money?
Well, the public has confidence in the currency, which they do, which the world...
Ha! What do you think, everyone? Do you have faith in the dollar? The dollar has been losing its global dominance and is now at a 25-year low with just 59% of global dominance. And with the amount of money printing, with the amount of M1, M2 money they're printing, do you have faith that the US dollar is a good store of value? Let me know. But let's keep watching.
The world does. That's really what it comes down to, that people believe that the United States currency is perfectly reliable and stable in value.
Okay, so as a store of value, it clearly isn't stable in value. It is not.
Burn.
But as a store of value, the U.S. dollar really, is it diluted as a store of value when M2 goes up by more than 25% in 1 year? Does the printing of more U.S. dollars somehow diminish the value of the dollars that others hold?
You know, there was a time when monetary aggregates were important determinants of inflation, and that has not been the case for a long time. So you'll see, if you look back, the correlation between movements in different aggregates, you mentioned M2, and inflation is just very, very low. And you see that now, where inflation is at 1.4% for this year.
What? 1.4%? Well, what is it now, Jerome? The CPI, the official inflation number, was at 4.2% with the latest CPI data that was released yesterday. And just in 1 month, it went up 0.8%. So that's 9.6% annualized. And he's trying to tell you, and remember, Jerome Powell's not an economist, he's a lawyer. So he's figured out all these laws to manipulate the financial system. That's why they really got him in office. And he's trying to say, look, it used to affect inflation, but now everything's different. It now no longer affects inflation, when we all know that's not the case.
Inflation dynamics evolve over time, but they don't tend to change overnight. And so we've had, and I remember well, I was in college during the 19...
Wait a minute there. He says inflation dynamics have changed, but they haven't changed.
70s, I remember well, high inflation and this feeling of powerlessness on the part of anyone to deal with it, until finally Paul Volcker did exactly that. And we've been in a low inflation, disinflationary mode ever since. So what I see is an economy where there's still a great deal of slack. I see the prospect of really significant progress as we put the pandemic behind us. As we see that data, we've got in place guidance that tells markets clearly when we will begin to taper asset purchases and when we will begin to raise interest rates, when the economy, in that case, when the expansion is very far advanced. So we have our tools, we have them in place, and we think that this is the appropriate policy stance. As I mentioned, inflation, it's something I remember well, and I'm very familiar with the history of the 1960s.
I guess, Mr. Chairman, sorry to interrupt. I guess my question is more about, I know where you are today.
Well, it looks like he's made a lot of progress with his unemployment goals. There's huge amounts of job vacancies, but because of all the free money the government's giving out, people don't want to work, and I don't blame them. Hey, if you can make more money sitting at home and that's what you want to do, you do that. I know some people do want to work that are still having trouble to find work. So it's now the time to start lifting interest rates and tapering. We can't wait any longer.
but I'm curious about what you consider the leading indicators, and in particular, whether you're concerned about challenged supply chains, because of course they are challenged.
So those are things like supply chains are, unless they're permanently challenged, there could be take an example of the chips issue with microchips issue right now. The automobile industry is having a hard time getting it. So this is a significant economic issue. And if there's a shortage of cars, then prices of cars might go up. That doesn't necessarily lead to inflation, because inflation is a process that repeats itself year on year on year. So supply chain issues, as we get back up to...
Sorry to keep interrupting, but he was just saying that, all these chip shortages won't lead to car prices increasing. Well, guess what? Used cars increased 10% in April alone. That's right, 10% in 1 month, and used cars and trucks increased 21% in 1 year with the latest CPI data that was released yesterday.
Full economic activity, you could hit supply chain constraints along the way, but that doesn't necessarily mean you will have a higher inflationary process if the Fed maintains its credibility and if inflation expectations...
Ha! The Fed having credibility? What a joke.
...remain anchored, which they weren't in the 1960s.
Sorry about making you guys listen to the Federal Reserve Jerome Powell lying for 4 minutes reading his script. But okay, so we all know that everything that Jerome Powell's been saying is wrong, and of course he's not going to tell the truth because he's a puppet for the markets, he's a cheerleader for the markets, so he has to keep coming out every day and saying, everything's great guys, go out there, spend all your money, and take on as much debt as you can. We won't lift interest rates, it's pretty much free money, take on as much as you can. But okay, so let's get into the breaking news with the new inflation data, the Producer Price Index today. And guess what it was, everyone? It increased 6.2%. That's right, 6.2% in 1 year. That is triple the Federal Reserve's mandate of 2%. And what is their mandate? Price stability. Well, what is happening now? Prices are extremely unstable. Everything is skyrocketing, and the cost of living is becoming unbearable for average Americans and for the poor in America, and the Federal Reserve is saying, take it, suck it up. Jerome Powell even said in his interview, we can afford temporary inflation. Well, no, people can't afford temporary inflation. They're living on the edge. So this just in, US producer prices increased more than expected in April in another hotter than expected inflation report Thursday. And listen to this, everyone. The Producer Price Index rose 0.6% last month. According to the US Bureau of Labor Statistics, the gauge spiked 6.2% for 12 months ending in April, making it the largest, that's right, the largest increase since the agency started tracking the data in 2010. What the heck are the central banks doing? This isn't just a little bit higher than 2%. This is the highest inflation data since they started recording it in 2010. If Jerome doesn't get things under control this month, or if he doesn't even start talking, or if he doesn't even start thinking about tapering or lifting interest rates, he needs to be sacked. And again, the experts got it completely wrong. They couldn't have got it any more wrong. It says here, economists polled by FactSet were expecting a 0.3% increase, so this is double that in April for the PPI over the previous month, year over year. The index was forecast to rise just 3.8% for the year, but it increased nearly double that, 6.2%. And the core PPI, which excludes volatile items like food and energy and trade services, that rose even more in April, and it rose 0.7% from the previous month, and it's jumped 4.6% year over year from a year ago, and that was the biggest jump since 2014 when the department first calculated the data. Now, of course, this comes after yesterday when the CPI data was released, and that led to a big sell-off in the stock market yesterday. So I doubt we'll have a big sell-off today because the stock market is already starting to price in this new inflation. But if we do start to get hints or little changes of words from the Fed, I can't wait to hear what Jerome Powell has to say this month, because now all the fears of inflation have been actualized and it's now here. So he now has some big explaining to do why he's not tapering. Now the CPI data, that's a consumer price index. This is the producer price index. So this is the price paid to producers to make things. So then that is going to flow on to consumer price inflation. And have a listen to this, everyone. This is absolutely crazy. Product detail, a major factor in April increase in prices for final demand goods, was the index for steel mill products. And guess what? That jumped 18.4%. And prices for beef, veal, pork, and residential natural gas, plastic, raisins, and materials and dairy products also moved higher. Look at this chart of personal incomes from the Fed. They've absolutely skyrocketed in 2021. Imagine if you told someone in 2019 that in 2020 we're going to have the deepest recession since the Great Depression, but incomes are never going to be higher and the stock market will be at all-time highs. They would have told you you're absolutely crazy. Well, that's just what the markets and the economy has become. Cray cray. Again, look at this consumer price index for all urban consumers, all items in US city averages. No inflation, eh? Look at this. It's going parabolic. We do have inflation, and we've had inflation, but they've been hiding it. And look at this consumer price index for all urban consumers. Look at your purchasing power in the dollar. The dollar is completely losing its purchasing power. All that money that you're working your butt off to work for every year, look what happened in 2020. It completely fell off a cliff and your dollar is becoming worthless. Everyone, this is absolutely crazy and it's time to speak up. Send letters to your local government. Send letters in the mail, tell them we want to stop the money printing, we want to get inflation under control, we want to stop the debasement of our hard-earned dollars. We have to do something now, because if we don't, your monthly grocery bill and your monthly costs are going to become unbearable, and that money that you work so hard for is going to become worth less and less. So everyone, this was just a quick breaking news update on what's really happening in the markets, in the economy. And hey, please share this with your family and friends so we can share this message and bring about awareness. And for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date on the latest happening in the housing market, stock market, and global finance news. And if you're bored, I'll put up some other videos here. I'll see you there.